right, so welcome. This will be a presentation today about business entity formalities. Are you doing good housekeeping with your business? Or in fact, are you putting yourself and your business at risk? I am Sarah Holmes. I am an attorney. I am the head of Holmes Business Law PC. Just briefly who we are, why am I talking to you today? So Holmes Business Law PC, we're a full service business law firm. We're based in Philadelphia and the mainline suburbs. Since COVID happened, we have been mostly virtual, but we've always maintained an office in Center City, Philadelphia, and an office on the main line in the suburbs. We have attorneys licensed in Pennsylvania as well as New Jersey, although both of our office locations have always been in Pennsylvania. And what do we do? If you don't know us or you're not a current client, we generally help business owners in a role that is probably best described as general counsel. So that's like, corporations, they have in-house business attorneys to help them. So any legal matter that comes into the business, they run it by general counsel. If it's something that is a niche type issue that requires legal advice of a specific expert, they would, pick the best person to refer that to. If it's litigation, often they will refer out litigation counsel, but the day-to-day legal needs of the business are usually met by the general counsel. So it's stuff like your contracts, negotiating deals for the business, leases, helping hiring people, dealing with trademarks, IP, the general corporate structure, keeping in compliance. That's all generally the role of a general counsel. Now, most small business owners, or even mid-sized business owners at times, having a general counsel on staff is not economically feasible in a lot of situations. So there are firms now and people like me and my firm that act as general counsel. We're just not in-house to you. So we help, both startups and existing businesses with all of their general legal business needs. All right, so let's get to the meat of the presentation today, which is, are you actually protected by your business entity? Now, we see this a lot with people. They think that just because they've set up some kind of business entity, that they are fully protected, meaning that if they get into trouble, if there's a lawsuit, that this business entity will protect them and their personal self and their assets. And often people will use one of those online entity formation agencies to form an entity. They'll get the paperwork back and they'll shove the paperwork in a drawer and, never see it again. There's nothing wrong with using one of those online services. It's just that they probably don't teach you a whole lot about how to actually keep the protection of this entity. And that's a huge problem we see with new clients that come into our firm sometimes is, hey, I had this business formed a couple of years ago. I don't even know what paperwork they gave me. I'm now doing this, that, and the other thing. I'm wondering if I'm really protected. And so we kind of have to go back and do an audit and see, well, what are the actual entity documents that you have? And not only just the documents that you have, but how are you really running this business? Because that has a lot to do with it and whether or not you actually have protection and can keep the protection of your business entity. You'll see in a little while, there's a particular entity that we get concerned about because we know that 99% of people are not compliant. There are, for most entities, some maintenance and housekeeping requirements that you need to be doing on a regular basis to keep the protection of that entity. The law allows you to set up a business entity like an LLC or a corporation. They allow you to do that to protect yourself from liability and to protect your personal assets, but it's not just with no conditions to it. Like there are certain things that you really need to be doing on a regular basis in order for the law to allow you to keep that protection. So we're going to talk about today what some of those things are, and you can kind of think about yourself and your business and your records and your actions to see if you are really compliant and whether you're keeping the protection of your entity. All right, so first let's talk about what kind of entity are you, because there's several different ways to do business. People often get confused between what these different things are. So the first thing is the sole proprietor. That's really also known as no entity. That means like you have nothing set up to protect you or your business. Now, I'm going to assume that if you're listening to this, you are not someone doing business as a sole proprietor as yourself, that you in fact do have an entity set up and you're hoping that it protects you. So most people today probably not talking about the sole proprietors, but that would be literally nothing. You have no business form set up whatsoever to protect yourself. Okay, then there's LLC. LLC is just short form for limited liability company. These can be set up in many different states. I happen to practice law, Pennsylvania, New Jersey. People come to us sometimes wanting to set up Delaware entities for some reason. But LLC is a limited liability company. And that is different from the next one, which is a corporation. So a corporation, the shortened form would be Inc., as it's incorporated. People often confuse S Corp. They talk to us about S Corps. I want you to set up an S Corp for me. There is no legal entity that is an S Corp. S Corp is really referring to a section of the IRS code, subchapter S, and it's a taxation. It's how something is taxed, either a C Corp, which is a regular corporation like I have on the screen, or an LLC that has elect to be taxed under subchapter S of the IRS code. It's electing to be taxed as an S corporation. So the entity itself could be LLC. It could be a corporation. The S part is just the tax status. So that's not the actual entity itself, which is something that a lot of people happen to be mistaken about. So the first thing when evaluating whether or not you have the protection of your entity in the first place is to be clear about what type of entity you have formed and what you're actually doing business as, because it does make a big, big difference, as you'll see in a moment, in terms of the requirements and what you have to be doing to keep the protection in place. All right, there's some basics though that pertain to all entities, whether it happens to be a limited liability company, LLC, or it pertains to a corporation. And these are the big things that you have to keep in mind. 30,000 foot big picture view. Number one is the money trail. This is critical. Where is that money going? You and your business are not interchangeable. Once you have set up a business entity, that is now a separate legal being from yourself, and it has to be treated as such, meaning the money needs to follow the business. If you get money into your business, like you're being paid from a client, customer, people coming into your business, that money goes into a banking account with the name of the business on it. That money does not go into a personal bank account. Same thing for money that you have to spend on the business. Now, there's an exception for startup costs, right? Like the law understands that when you start a business, maybe before the entity is finalized, or you're doing a research and development stage, that you're going to incur certain business costs that may have to come out of a personal account, personal credit card. That's okay, because people understand that's your startup phase. Once you are beyond that startup phase and you have the business entity set up, you need to have a separate banking account, separate checking account. If you want, you can set up a business savings account even, and money coming into the business and money going out of the business needs to go through those business accounts, not the personal accounts. We find that often people are mixing these up, or what happens frequently is someone starts out in business as a sole proprietor, doing business as themselves, and they reach, a level of success, which is great. And they might go and form a business entity like an LLC or a corporation. And for whatever reason, they don't ever change the banking. They leave stuff going into their personal account. Often it's because it's inconvenient to change accounts. Like you would have to go, I don't know if you have to close out the personal account, but you would have to open a brand new business account for that money. Some people don't want to do that because it's kind of a hassle, but that's absolutely wrong. Once you have that business entity set up, you need to have bank accounts for that business. And that's where the money, again, it goes into that account and it comes out of that account. So when you have expenses, another thing I'll tell you, we see people doing is they get credit cards, and they get credit cards in their own name. And they might be credit cards with some really amazing rewards programs, like whether it's travel points or cash back. but they're not business credit cards. Like if you look at the name on the card, it's that person's individual name. It's not a business name. And now they start paying for things for the business out of the personal credit card. Again, that can be problematic. You really, to keep the separation and to keep the protection, all your money stuff has to be going in and out of accounts and cards tied to that business, not you yourself personally. That puts you at risk. So if you're going to think about what are you doing right now, what are your practices? Number one is absolutely business banking accounts and business credit cards. We're going to do a future series on business credit and how you establish that, because that should be separate from your personal credit. In the beginning, if you are a startup business, that's going to be nearly impossible because you have no history, you have no record of revenue. It may, in fact, be your personal credit backing something like a line of credit or a business credit card. But the point is whether that credit card itself is really still in the name of the business. And again, if you're running a business, that should be in the name of the business. It might have your name on it because you're the signatory, of course, but it's very clearly, this is a business banking account and this is a business credit card. So this would apply whether you have an LLC or a corporation. The money, follow the money trail. And hopefully we're following that money trail in and out of business accounts, not your personal accounts. All right, well, what if you have an LLC? What are you really supposed to be doing with this? Okay, so number one is you should have an operating agreement. Now, if you're a single member LLC, meaning you are the only equity owner of that business, many people don't even have an operating agreement. That's problematic. It's one of the formalities that you should have. It doesn't get filed anywhere. When we set up LLCs for clients that don't have business partners, we use a very straightforward agreement. It's not even an agreement, but it's like, a few pages, 3 to 5 pages. It just lays out how much equity is this? How are you going to be taxed? What's your ownership percentage? And again, the whole reason for that, even though it's one member, is to keep the formality in place, hence keeping the protection of having a business entity separate from yourself and protecting you. So even if you're one person, you really should have an operating agreement. And if you go to open a bank account, they will often ask to see that. So single member operating agreement. Now, if you have business partners, like you absolutely must have an operating agreement in place. Otherwise, there's really no record of who owns the equity in your business, who's doing the voting, how things are managed in that business. And if you ever have a dispute with your business partners, there is no way to go back and prove what the agreement was between the parties. And you're going to be subject to the state's default rules on LLCs with partners that don't have operating agreements. And very often you will find that those provisions are not going to be favorable to you when you have a partnership dispute. So with partners, operating agreement, absolutely critical to keep protection and keep things in place. Now, if you have an LLC and you have partners, you probably want to have resolutions. And we're going to talk about this in a minute with the corporations, but an LLC, people like these because they are very flexible, tend to be easy entities to manage. And I say that because a lot of these things I'm telling you about with regard to the LLC are not requirements. Like there's no one from the state that's going to check in on these things, but they're good things to have to show that you are treating this entity as something separate from yourself. And when you have partners, I'm going to tell you that they're really mandatory just for your own safety and your own well-being. And you should be doing this stuff. So if you are in an LLC and you have partners, you should be documenting your decisions, and not necessarily every day-to-day decision regarding the operations of your business, but any kind of major stuff. So for example, if you decide you're going to bring on another partner, if you decide you're going to sell off part of your business, if you decide you're going to take on a really big asset, that kind of stuff, if you're documenting that in resolutions between the members, that's going to protect you and your partner. And it's going to protect you to say, hey, we agreed on this. Here's where we memorialize this. Nobody can come back later and challenge it. Also, if you and your business partner Or even let's say you don't have partners. We go back to the single member LLC. If you have other business interests, let's say that you have multiple LLCs, you're running multiple businesses. This is where these documents become absolutely critical. What you don't want is for someone to say that you are intermingling and mixing and matching these businesses together. Because if you're doing stuff like that, now there's a question as to whether not only someone can get at you personally, but can they get at these other businesses you have? And so that's why if you have proper paperwork in place and things like these resolutions and the operating agreement, you can go back and prove, here's the paper trail. I kept all this separate. All of this paperwork has to only do with, ABC LLC, ABC LLC. It has nothing to do with my other business, which is XYZ LLC. And you can prove that on paper. The other thing with partners that you really want to have in place is something called a buy-sell agreement. People often don't know what that means. The buy-sell agreement is really the document between the partners that would describe what happens if, God forbid, something happens to one of the owners of the business. So, for example, death, disability, incapacitation of a member, any situation really where someone else would be able to seize that person's membership interest. So it could also be something like your business partner goes bankrupt and now there's a bankruptcy trustee that's going to take their share of your business. It could be a divorce decree and the family court is, awarding half of your partner's business interest, excuse me, to the ex-spouse. Any situation where someone's going to come in and take your partner's interest, that scenario would be dealt with in a buy-sell agreement. And it would say, if any one of these things happens, then, that person that you don't want to be a business partner, you have to buy them out. And it would specify how much you have to buy them out for and how long you would have and all the mechanics of how that would work. It's very important when you have a business partner. Now, there's also scenarios sometimes when someone voluntarily wants to leave the business, whether they want to retire, whether they've just decided they don't want to be in business anymore, and they want to go their own way. The buy-sell agreement, again, would address that. All right, if you tell your partner you want to leave and you don't want to own the business anymore, how much notice do you need to give them? What is this business worth? Who's going to figure that out? What's the formula you're going to use? If you can't agree on that, who are you going to go to resolve that dispute? All of that stuff goes in that buy-sell agreement. So again, not something that's necessarily required anywhere. The state's not going to ask to see it. The IRS is not going to ask to see it. But for your own protection in your business and for the protection of your partner, a buy-sell agreement is a really, really good thing to have to protect yourself. So again, keep in mind this optional versus mandatory. The LLC stuff I just described, as far as the state is concerned and legally, these things are optional. Now, to the extent you ever get yourself in trouble, and especially in that scenario where I described having multiple business interests, it becomes really less optional, because if, let's say you're getting sued, right? And the lawyer on the other side starts asking questions, well, where are your resolutions? Where's your operating agreement? The more you can't produce these things to show that you've been running this as a separate entity other than yourself, the better off their argument is going to be that you really did not respect the formality of this entity, and the better ammunition they're going to have to try to get at you personally. So again, it's not mandatory, but you are well advised to have these things in place to protect yourself, just in case there's, a bad outcome later and you're in a lawsuit and they're now asking for these things. All right, corporations. Now, corporations are really where we see people go off the rails. People call us on a regular basis and they've been Google lawyering, they've been doing research, which is fine. You should always be informed, always do your research, and then, talk to a knowledgeable person about these things. But many people get it in their heads that they need to set up a corporation. They think it has better protection, they're more insulated. That's not necessarily true. You can have protections in an LLC if you set it up properly and you abide by some of the things we just talked about. Now, the thing with the corporation, why we get concerned when people want to set these up, is because a lot of this paperwork stuff we're talking about for a corporation, this stuff is not optional, it's mandatory. And we know from seeing it behind the scenes. I mean, we have hundreds of clients and we see sort of behind the scenes of their business. We know that 9 times out of 10, for a single person that owns all the shares of a corporation, they are not doing these things. They do not have this paperwork in place. So what does it start with? Well, obviously it starts with your incorporation papers, but that's a given because that's going to be filed by the state and you just can't have the corporation without that. But you're going to have bylaws. Many people that went to like an online agency to set up their corporation, they're going to have bylaws at least. So that's usually good, or they've found some generic ones online. Bylaws are usually okay because they're very standard. We get concerned sometimes with stock certificates, especially when people use these online formation services. Often they're given just a giant binder of things that they don't know what's in there. They're given blank stock certificates and a ledger and asked to fill out the stock. We see people doing crazy stuff like, authorizing an initial, 3 billion shares at 5 cents a piece, just bizarre stuff. So stock certificates and ledger, your corporation does not have to have stock. You can be a non-stock corporation, but that would be put into place at the time of formation. So if you have no idea what I'm talking about, you might want to go back and just look at your incorporation papers to see if you are a stock or a non-stock corporation. And if you are stock, where are those stock certificates? Are they filled out? Are you keeping them safe? Because if you lose those, you're really going to be in big trouble, which is often why we like non-stock, because people don't have to really worry about keeping them in the binder and updating that ledger. But all right, know where those things are. Meeting minutes. This is huge, huge, huge. Meeting minutes, if you own or are a shareholder in a corporation that you're controlling, are not optional. Even if it's just you, it sounds so silly, but you need to sit down and have a meeting with yourself. There's no, set timeline. I would do it at least yearly if you can be a little better about it. And it's just you, and it's a fairly simple type of business where there's not a lot, maybe tax-wise or legally going on all the time. Maybe once or twice a year is okay. You sit down with yourself, you have a meeting, and you just put down any type of major decisions that you've made for the business. Like, let's say in 1 year, I've decided this year I'm going to be taxed as an S corporation instead of a C corporation. That would be something you put in a meeting minute. Or I've resolved to buy an office for myself this year. The corporation approves the purchase of this office. The corporation approves the purchase of this. Those are things that go in a meeting minute. Now, resolutions, it's somewhat similar to resolution. The resolutions would be more like things that you're voting on. So we resolve to issue 500 shares of stock to John Smith. We resolve to buy back the 500 shares to John Smith. We're doing a resolution to agree to put in place an employee health plan this year. Things like that. You want to document these decisions. You document them via resolutions where it's clear that people are coming together to vote, and this is the result of the vote. We agree and we're resolving to do this. Meeting minutes is just simply we're having the meeting. This is what transpired at the meeting. And the reason this becomes so difficult for people is because it's really an administrative task. And so the whole thing is, like, if you don't have someone within your business that can sit in on a meeting with you and take the meeting minutes, take the notes, you have to figure out a way to make this easy for yourself. One thing that we suggest to people is use your phone. Your phone has a voice recording function. You can sit in the meeting, again, even if it's just you, if you're the only shareholder, you can sit in a meeting, record the date and time, put it on your phone, and send it out to be transcribed. There's a thing called rev.com, rev.com. They will almost instantaneously and for a very inexpensive amount of money transcribe voice files for you. So that, to us, is a very easy way for people to comply with this without having to worry about having a secretary, having someone taking notes, typing up the notes, putting the notes in a file. Just send it out, have it transcribed, and put it in your corporate meeting minutes or resolutions folder. These are not things that get filed anywhere. Again, nobody's looking at this stuff. This is part of the problem. No one's looking at this stuff until there's an issue. And then people are going to be asking you for these things. And then there's a problem. And then it's too late. So that's why people kind of manage to get away with not doing these things for years and years until something happens, or they need to do something like go sell their business, until they're going to take on a partner, until something happens. And then someone comes asking, well, where are your minutes? Where's your resolutions? And they don't have them. So if you have partners and there are multiple shareholders, you're going to want to have a shareholder agreement, which is very similar to that operating agreement we described for an LLC. You're also going to want a buy-sell agreement, almost identical to what I just described for you for the LLC. And again, mandatory. So the mandatory stuff is the meeting minutes and the resolutions and keeping good corporate records. If you're not keeping the records, that's where you're going to suffer consequences of not respecting the corporate form. So what does that mean? All right. Consequences of being sloppy with your business entity. Number one, everybody's heard of this. Almost anyone that calls us to form an entity, again, they've been internet lawyering, they've been doing the research. Again, that's a good thing to be informed. Piercing the corporate veil, that's something everyone has pretty much heard of. That is when you have a corporation or even an LLC set up. It could apply for an LLC as well. You have that set up, but you have done something to allow the person that's going to sue you, you've allowed them to pierce the corporate veil, or at least to make an argument for it. Now, people often think that this is somehow automatic, that, oh my God, just because I accidentally made a deposit to my personal bank account instead of the business bank account, the corporate veil is pierced, I'm exposed, my life is over. That's not really how it works. Like, somebody has to somebody has to have an issue with you, right? And you're in litigation, or you're in some situation where the court can determine that that corporate veil should be pierced. So there has to be some argument made, some evidence presented. That's why I'm telling you, if you have this paperwork on the back end in your files to paper this up, someone making this piercing the corporate veil argument is going to have a tough time because, hey, here's all my corporate records. I was doing all this stuff. I did respect the form. Maybe once I did something by accident, but look, all the other times I was respecting it. I was keeping it separate. I'm in good shape. You're going to have a really good defense set up for yourself if you're doing those things. Personal liability. Again, the whole point in setting up a business entity is to keep yourself safe. You, yourself, your wages, your assets, anything else you own in your own name. If you are doing these things properly, that stuff should not be subject to someone else getting a hold of that in a lawsuit if you're doing what you're supposed to be doing. All right. If you're sloppy, it's going to be an uphill battle for you to get financing. Now, with the COVID stuff, so many people have been applying for loans and financing, and the bank's asking them all these questions. Well, where are your resolutions? Where are your bylaws? Where's your operating agreement? And people are scrambling. Oh my God, I don't even know what you're saying. Are you speaking another language? I don't know what any of this means. I never had any of this in my business. Well, this is not the best time now to be going and creating these documents, is when you're trying to get someone to loan you money. Number one, it doesn't look good for you. It doesn't look good for your credibility and seriousness as a business owner. And then the bank's going to kind of wonder about, well, how have you really been running this business? Like, are you really subjecting this whole thing to liability? Why would we loan you money if you're not really even running this business in a proper, formal way? So when you go to get financing, is not the time to be creating these documents from scratch. If you got to paper up a few things, that's okay. But if the bank's ever asking you for an operating agreement, you should know where that thing is. You should know what it says and be able to pull that out within a few minutes. So it could definitely affect your ability to get financing. All right. If you ever have questions about whether something is set up properly, you can feel free to reach out to our office. There's a phone number, the 215-482-0285. You can email us, which is the info@phillysmallbusinesslawyer.com. We've done things for people that I would call like a business audit, where, even if you went to some, online provider that set up your business, we're happy to do a consultation with you, take a look at the paperwork you have in place, suggest room for improvement, and kind of go over things with you. Otherwise, feel free to take away the freebies today. Think about the types of documents I described to you. Think about how I described separation of the finances and the banking and the credit cards, and go and do your own self-evaluation and audit and see if you're doing these things to keep the protection. Otherwise, we're happy to hear from you. Feel free to reach out at any time. I'm going to stop the sharing right now and check out the chat and just make sure if anyone has any questions.